Good morning, traders. This is Michael coming to you from GammaEdge on Friday, January 17th with our pre-market morning strategy and briefing session. As always here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Looking at the market trend model. The market trend model game plan has been posted. We were discussing, obviously, this whole week about the initial bullish triggers that we were looking at on 113 and then heading into 114. We discussed progressive exposure within the overall downtrend of the colored ribbon. Again, once we start to see these moves up in the short-term CT, and then we move up towards above the shorter-term moving averages, what we like to do and how we like to position here at GammaEdge is to start trial balloons, or what I call progressive exposure. So instead of a full position, you would start with a quarter to half position or third position. And then as the market trend model continues to move to the upside and reinforce the overall bullish look, then you add to your positions, and then you continue to ride the market trend model until we get some sort of failure. Obviously, now we're pushing into the colored ribbon. Historically, if you scroll back and look at any of our previous looks and match with what we've had before, this is an area where we can see some stalling. We can see some price compression, as well as some flattening of the overall bolded CT as the moving averages. Again, if we're going to see a continued bullish state in the overall market, we would see an emergence of the CT above the cyan ribbon to the upside, and then we start to get a positive slope in the red and cyan, and this can lead to a significant long-term bullish look in the overall market. Again, not a straight line. We'd most likely see some sort of up move and then some sideways consolidation and price compression, and then another up move. What we do like to see is if we get into this colored ribbon and do see some stalling and compression of the CT and the moving averages, then we like to watch for the possible failure as we move into this colored ribbon. And then if we start to see a failure, we would change our stance to a little more cautionary. Historically, as I've talked about, when you scroll back, we'll get if we're in a longer term downtrend, we'll get a one-day move and then a quick failure. This seems to be a change of character overall right now, but just understand where we're at within the context of the overall sentiment and structure of SPX. Again, pushing up towards that 6,000, which we've talked about this past week. It could be an area of stalling, as well as some sort of pullback. So we'll continue to watch this market trend model intently. Again, the bolded CT is your intraday look. If you're a 0DT trader, make sure you're watching that as well as the moving averages. Heading the SPXA, we like to call this here at GammaEdge the super tankers. This is the institutional money, obviously positioned on the monthlies that you can see by the expiry up here, heading into February here. Again, 5,900, we've drawn a red arrow there. It's extremely important to stay above that level. This basically shows us where the overall institutional money is positioning. Again, call dominated. We see 6,000 up there as a large round number area to get above. We'd like to see this net delta continue to change green if we're looking for a price appreciation in the overall market. That would indicate to us that institutional players continue to place out of the money call speculation in large numbers above our overall levels. So again, this would possibly foretold price appreciation. Again, not a crystal ball, but again, watching the overall sentiment and structure, we like to understand where the larger players are positioning, not for today on a 0DT level, but for the monthlies and on out into the first quarter and second quarter of the year. SPXP, all expiries turned on here. We are call dominated. We've spoke about 5,900. We like to see that confluence of multiple expiries and multiple structures. So again, staying above that transition, 5910 to 5950. We'll notice that on the all expiries here, as well as heading into the 0DT. And then looking at 6,000 peak X COI. So obviously an important level overhead. Again, we continue to see the overall structure above us continue to change to a out of the money call dominated speculatory state, which is good if you want to see price appreciation. Then also we see the left-hand plane above or below spot price here continue to change to an in the money call dominated, which can be supportive on any pullbacks. So we'll continue to watch this. Again, 5,900 and 6,000, those important levels heading into today. SPXP 0DTE net stat command here. We've provided full commentary in the SPX game plan. dig into what each one of these levels means. So make sure you're looking at that and reading that. Again, outlined here, we have the yellow, which is the expected move for today, quite large, and then we're overall drunken sailor range. Again, COI up here at 6,000, PGX at 5950 as I do this morning. So understanding that staying above a very narrow transition, and that is an opportunity as price pulls back to get involved if we do see the MTM maintaining its bullish look, as well as if you're a 0DT trader, you need to be looking at the vol M command. Understanding that those call and put centroids need to maintain at least their positive slopes, or a positive in the put slope and a flattening to increasing in the call slope, and that rate of change, and understanding that both of those need to be moving to the upside would be indicating that call speculators are moving into the market and maintaining that out of the money call speculation throughout the day. Do note that the net delta above this 59.50 and this 59.75 are in the money puts above us, up towards that 6,000 level. That's why we've noticed that, where we have a significant amount of call OI there. So this may be providing us a ceiling for today. If we do get above 6,000, then we could have a pathway up to higher. But again, we'll have to watch the volume command intraday, as well as maintain that MTM bullish look and stance. To the downside, getting below 59.50, we might turn a little bit more cautionary, understanding 59.20 down here is an important level of in the money calls here, and then understanding below 59.20 and 59.15 we could move down towards that 58 to 75 level. So we'll continue to watch that without intraday, and we'll continue to watch the net stat command as well as the vol M command intraday. So heading to our thesis for today. Again, I've outlined the overall significant TA range by these gray boxes. Again, very easy for you to do if you're any sort of TA analysis. And basically, I just like to look to see, do we have a confluence of price action as well as key gamma delta levels within the overall complex and structure? And we do on the 4-hour time frame as well as the daily time frame. That 6,000 level, as you can see, scrolling all the way back to November, has been an important area that we continued to move up towards and then get rejected, and then we moved above, and then we had that significant move down through 6,000 on Wednesday, the 18th, and now we've been stuck within this overall range. Basically, I'll say 5,800 up towards 6,000. So will this continue to be that range, or will we start to break out of that range and move above 6,000 and see OTM call speculation come in? So within the overall structure for today, we are going to be pushing that 6,000 most likely pre-market. I would see at the open, thesis A would be a push towards that 6,000, and then a rejection and pull back down towards the top of the drunken sailor range, possibly around that 59.80 level, or even down towards the 59.60, 59.50 level. That would provide an opportunity to get long the market if we continue to see the vol M and MTM stay in a bullish state. If we get below 59.50, then I'd be a little more cautionary, as we're within the overall drunken sailor range, and this can be a very choppy day as we head into OPEX. Again, below 59.50, down towards that 59.25 that we outlined on the 0DTE. Still supportive type action as we pull down in there, just understanding it's a drunken sailor range and maybe an opportunity to get long for a move back up towards the top of the drunken sailor range. But below 59.25, I'd be a little more cautionary and look for a pull back down towards that 5,900 level. And then I would anticipate the 5,900 level to be extremely supportive, as we saw that confluence of multiple expiries and time frames. Again, could be below 5,900, then obviously we look for some weakness down towards the bottom of the drunken sailor range. So supportive type action on any pullback until it's not, within an overall call dominated state, and an overall bullish look on the market trend model is kind of my thesis for today. Again, OPEX, most likely a little bit higher volatility as we push back and forth around, and positioning for the monthly expiry. So that's it for me today. Everybody have a great day. We'll see you in the Discord in a few minutes. Thanks.